Hello, and welcome back to another trade review of Monday, the 3rd of February 2025. So, as you can see on the screen right now, there are several trades that I have taken on this day, and there is also in this video you will learn on why I will not be trading on conditions like this in the future. So, let's first start off with the review and then get into the actually lesson that I learned from this day and how I will prevent myself from losing money in the future on setups that occurred on this day specifically. So as you guys know, I trade the ICT 2024 mentorship model, meaning that I actually only take trades on the first presentation of the New York session. So what is first presentation? First presentation is the first fair value gap that forms after 9:30, and it is only able to form on the 9:31 candle and not on the 9:30 candle itself. This has to do with the regular trading hours and the electronic trading hours. So the real first presentation is always formed after 9:31, so it can only be formed on the actual 9:32 candle, if that makes sense, because regular trading hours starts at 9:30. So 1, 2, 3, here's your fair value gap, and you can only create a fair value gap with 3 candles. So, all right. When we had the opening range gap, it was around, I think it was 130 something handles, meaning that it fits my criteria to actually take a trade. And I did take a trade yesterday. I actually took 3 trades, as you can see. I bought 9 times, I won 1 and lost 2. So the first trade, first presentation formed, and I entered on the top of the fair value gap, a little bit lower actually at consequent encroachment, as you can see. And then I took my first profit at 12.5%, my second profit at 25%. Why 12.5%? Due to the fact when a gap is larger than 120 handles, I actually change my take profits targets a little bit. Um, and how do I change it? Well, I change it in the fact that I still use the opening range gap, but from 120 handles, I actually only consider 0% to midpoint as the opening range gap, so that all my 25% profit target, 50%, 75% are adapted to a smaller range and that I'm able to take several more partials. So as you can see, I took my first profit here, second profit here, and then my break even got hit. We then went below the opening range gap and then we closed above again. So I bought again. My stop loss was placed beneath this candle, and as you can see, we got taken out here pretty instantly within 4 minutes, and same here, I got taken out in 3 minutes. So after I lost 2 trades in a row, I was like, that is odd, because I know that my winning percentage on historical data and on the reviews that I've done previously is around 80 to 94%. For example, with the NQZ and NQH contracts, before these trades, I had a winning rate of 94.6% with this model. So I was like, it's very strange that I lose 2 trades in a row where I should not expect that many losses with such a high win rate, right? So after I reviewed and did some testing on my script, as you guys know, I have programmed the entire 2024 mentorship so that I don't talk myself into trades that I shouldn't take. I did some tweaking on my model, and after some tweaking, I actually came to the conclusion that yesterday I should not be trading. So what did I change? One of the only change that I actually did was that I am only allowed to trade if the first presentation for value gap is bigger than 4 handles. So you can write this in your notes. You can backtest this yourself if this works for your model as well. that try to see and add the filter criteria only trade on a fair value gap if it is a certain size. And for me, for my model, testing on historical data, I came to the conclusion, all right, I have a way better win rate and a way higher profit rate when I only trade for value gaps that are 4 handles or larger. So that is actually the review of this day on Monday, February the 3rd, that I paid a small premium. For example, I was up with this first trade $600, then I lost my profits in this second trade, and then I went into drawdown with the third trade. And I paid a premium of $500 to gain access of this data, and that in the future I will not be actually trading for value gaps that are smaller than this. And for your information, the difference in profits over the past couple of 4 years was that it went actually times 3 the profit rate if I only trade for value gaps that are 4 handles or more. So really go and backtest this if this is a filter criteria for you as well, and see, okay, how much does my win rate change if I add a filter criteria in regards to the gap size of the actual fair value gap. So take that into your notes. I hope you learned something from this short review. It's a very short review, but it is a very informative lesson I learned. And again, I paid $500 for this. That's fine. I don't really mind losing $500 because with this algorithm since December, I have taken my account from 12K to 21K. So this was a really informative lesson. I hear that I am going in cycles right now. So thank you for watching. If you like these reviews, then give this video a like, hit a subscribe, and actually leave in the comments if you're going to backtest the actual fair value gap handle size, and tell me your results with it. I'm really curious if for your model you have the same results if you add a filter criteria to it. So thank you for watching, and I'll talk to you guys next time. Bye bye!